Next up, we've got Kyle M's question. He says, I've just gone full-time as a freelancer. What are the best options to set my wife and I up for success now and in retirement? My wife pays into a pension at work, and we are fully funding our Roths.
Love it. So it's interesting, right? Full-time as a freelancer, what that means now is you're self-employed. Congratulations. You are now an entrepreneur. That's a fun.
Entrepreneur.
Yep.
That's the French way. No, just kidding.
It just sounds so fancy.
Yeah,
I mean, everybody, like you watch
Oh.
dating shows and they always have, somebody lists themselves as influencer, entrepreneur. And I'm like, what does that person do? But keep going.
Yeah, so you are a self-employed individual, which means that opens up some opportunities for you from a retirement planning standpoint. We'll talk a little about that, but I think before we even get into that, for someone who used to have a side gig and now they are just now getting into doing this full time, I think before we even talk about retirement plans and stuff, Brian, I think it'd be interesting to hear you talk about financial order of operations still holds.
applies.
I think that step 4, emergency reserves, becomes so important because while you were an employee, while you had other dollars coming in, a prudent emergency fund for you may have been 3 months to 6 months of living expenses. But now that you are self-employed, now that you are the boss, it may be prudent for your emergency fund to be larger than it would have been otherwise. So I would go back, revisit the financial order of operations. Brian, can you hold up the thing for me?
Oh, yeah.
If you want to go to moneyguy.com/resources, you can download our free deliverable. You can even do our deep dive at learn.moneyguy.com. The other thing I'll say, Brian, I think this is important before we even talk about retirement planning, is when you let your side gig turn into your full-time gig, you need to approach it as a full-time job, which means take it seriously. I'm amazed at how many entrepreneurs who've had some success, and I say, okay, well, talk to me a little about where's your revenue, what's your profit, what are your expenses? Oh, I have no idea. Money comes into the checking account, money goes out of the checking account, the checks don't bounce, I'm good. I'm like, oh boy, no, you are not good. If you're going to be a business owner, treat your business like a business. Understand the money you have going in, the money you have going out, and make sure the money you have going out is justifiable so that you're running a nice, healthy business. And by the way, there's all kinds of amazing resources out there. There's all kinds of softwares that will allow you to track your expenses and look at your balance sheet and track your profit and loss and all that kind of stuff. Once you've done that, and then you get to the point where, okay, now I want to start saving for the future. I've got my baseline built. What are some solutions for small business owners when it comes to saving for retirement, when it comes to building for he and his spouse?
Yeah, I think it's so cool. This is the greatest time to build wealth for my entrepreneurs. Because, for most people, the first stop in the past has always been the SEP IRA. And the reason SEP IRAs were always so powerful for entrepreneurs and side hustlers and everybody else is because they had the unique ability to go back in time, meaning that when you started doing your tax prep, your CPA or tax preparer or your self-prepared, you bet, man, I made my company actually made money last year. It was great. I made it through the gauntlet of the 36 months of building out, my pre-entrepreneur to now. That's always a congratulation moment. And it's always shocking when you do your taxes or you do your financials and you go, wow, I got to figure out how I can get rid of some of this from a tax perspective. What better way than to essentially let the government fund 25 to 37 or even more if you're with your state income tax of this provided deduction by funding a retirement. And that's where SEP IRAs have always been awesome, because they're so easy to set up. They let you file until the extension deadline of your business and personal tax returns. So really powerful stuff.
Super powerful.
But there's been a change over the last decade, really, and really with new legislation that passed in the last year or so. Now solo 401ks.
Super attractive.
Let you go back in time just like SEP IRAs. But in addition, because remember, SEP IRAs always had to be funded by employer money. That was always the catch. It wasn't something because remember, when you're an entrepreneur, you not only are, a lot of times you're working in the business, so you're an employee or your labor's in the business, but you're also an investor because you're the one funding this endeavor. So the government, lets you recognize both of those two elements. That's why when you have S corps, you see people who will pay themselves the salary for when they're working in the business, and then they'll have the essentially the dividend or distributions they take for being the investor or the owner of the business. Well, the same thing kind of works with the way this all gets funded, and the fact that with SEPs only allow the employer, the profit sharing, to go in. When you get a solo 401k, it not only lets you do the profit sharing or the employer, but it lets you do the salary deferral as the employee. And that's a big number.
Yep.
I mean, $22,500. That's right. This is how, when you talk about the 415 limits, and then when we get up to $68,000 of savings, you're like, who puts that much money in their retirement accounts? It is the entrepreneurs, because you're essentially letting the government fund a lot of that. So that's the step I would have, Kyle. Now, I want to tell you a cautionary thing, though. The government's they're not fools. They set up these solo 401ks. They're super easy, because that's the thing. SEP IRAs, you just had to file a 5305. It wasn't even filed. You just filled it out and then kept it in a file cabinet or stored it away, scanned it in, and put it out on the cloud. It was something you had to keep internally to file. Solo 401ks, they've tried to make it just as easy from an administration standpoint. You just file some paperwork and keep it internally. But there's a big trap that I think a lot of small businesses fall into. Pay attention to how much you have in that solo 401k. As soon as it crosses $250,000, you have the requirement of filing an annual $5,500 with the government. And by the way, guys, they're serious about this.
They are very serious.
I just had a client who got a notice. Now, the good news is they're going to be fine. But they got a huge, it's close to a six-figure notice from the IRS for not filing an information return on the $5,500, because they're charging something like $250, $260 a day penalty if you don't file this $5,500. It's a huge deal. So I'm just telling you, take advantage of the solo 401k, but please respect the annual $5,500, the $5,500 EZ filing requirement. It's just an informational return. There will be no taxes due, but do it. Make sure you file that. And you don't have to worry about it. If your account's only $100,000, no big deal. But I also want to caution you, if you're rolling outside assets into the the solo 401, that also has an impact. But those, Kyle, I know you're going to have success. I'm excited for you. I think you covered a lot with the cash reserves. And then the last, just business, entrepreneur to entrepreneur discussion. Don't get busy doing nothing. I wasted a lot of my initial stages of business doing only what I was good at, which was creating outstanding financial statements. But that didn't get any new clients, didn't get any new business coming in, because I didn't like calling people. I didn't like talking to people. I didn't like networking. So that's what I had to have, a buck up conversation with myself and say, go do the stuff that actually go help me be where I want to be, not just doing the stuff that feels comfortable and safe, because I think that's the trap a lot of us entrepreneurs do. We do what we do best when we might need to be out there shaking the trees to see how we grow. And
then you talked a lot about how to save for taxes. Even just accounting for taxes is a huge thing. Don't forget that as a self-employed individual, there are going to be some additional taxes there that you did not have to pay previously. Make sure you're holding a little bit of that aside so that when you do file your return, you don't have a big and a big tax bill you were not planning on.